I want to interject a thought here. This is the silver gold ratio on a monthly basis going all the way back to 2000. And you can see, what happened down here when we had QE really start taking effect. Silver got ahead of gold, went all the way down about 30 to 1, and then it crashed and all this stuff. It's sitting about 52 to 1 right now. Now, I bought platinum yesterday, because not on leverage, just because I'm wondering how much further down could that metal go, say even in the next couple months. I'm beginning to wonder about something here. I would think that silver could be a hell of a lot lower priced right now if it was not for the major marketing campaign behind it. Even though most of the middle class does not own silver, there still is a pretty heavy campaign behind this metal in the alternative media, which is really getting a lot of exposure on the mainstream media. The reason I am saying this is that when I'm looking at platinum should not be less than gold. And there is no chart. I have a chart I made actually from the platinum gold ratio. But if you're looking today on Kiko, it's still, gold is still 5% more than platinum. The thing is, it doesn't stay like this. It's been staying like this for months and months and months and months on end. And this does not make sense. Now, just recently, platinum actually got ahead of gold for a little while, within the last month or so, back when silver was taking off. People who are actually into silver kind of don't look at the other metals too much or anything else. But, there is a tendency when silver goes up, the rest of the economy and the rest of the metals and the rest of the commodities are going to be running pretty hard too. Sometimes one gets ahead of the other, but they'll run together pretty much in general. So I think that this situation with platinum doesn't make any sense fundamentally, how it's going to last this long. So I decided to get into it on non-leverage. But as I stated before, I'm mainly in cash. I'm just waiting. Somehow I don't know what the heck's going to happen with this stuff, but fundamentally, where platinum is, it makes no sense at all. If gold is going to be a winner, platinum, let me put it this way: if you take the historical ratio and you go way back, 50 years or something, platinum is about 40% more than gold on average. But in normal times, it's usually about twice the price of gold. So if they're talking gold going to $2,400, why couldn't platinum be near $5,000? But what it's telling me is this: there is something underlyingly really wrong with the economy, because platinum and palladium and silver are industrial metals. In the case of silver, it's more of a, it has a little more of a it doesn't actually, that's another myth about silver with the monetary use. Yes, it's a precious metal, but it really has not been used as money since the 1800s. I always hear, people saying silver was on our coins. It was in our coins, but it was in our coins more or less as a commodity. It wasn't actually owned by the central banks and all this type of stuff. It was gold was the money. Silver was not actually the money. It's like they took silver out of coins, just like they took copper out of the penny. The commodity became too expensive in terms of fiat dollars to actually make coinage out of. But that's kind of another myth in a way. But there's a major advertising campaign behind silver, so actually that's what's helping it along pretty good. Because I think silver would have crashed a lot harder than it did. Because I know the people are way into the silver camp, but I'm just trying to look at this in a rational way. If you look at platinum very rarely goes below gold. It's like way more expensive to extract, and it's way more industrial use. It's more industrial use than silver. And palladium is even more industrial use than platinum. And platinum, bar none, is the best, nicest jewelry going. It's better than gold, it's better than silver, and silver tarnishes, and everything else. and it's better than palladium, of course. Now, why would a price be less than gold when you have shortages? You know, I think there's actually more can be argued for in a conspiracy here than anything, but there is no conspiracy. It's more or less something is not right with the economy, despite what the numbers reflect. And, you know, Mark Farber alludes to this sometimes. And I got a lot of respect for that guy. I got a lot of respect for that guy in a lot of ways. He says there's something wrong with the economy, and it's not showing up on the numbers as much as you would think. That I suspect too. This is a very, very long-range chart of palladium. And, you know, I still want to point out about this 2001 high back here at the end of 2000, when the price of palladium basically went to 4 times the price of gold. That was because there was a rumor that the Russian supplies would be cut off. I got to point out again and again and again about both these metals, palladium and platinum, that there's basically 2 places in the world where they come from, more than 80%, South Africa and Russia. And in the case of South Africa, you're going to get a lot more Chinese influence in Africa. And they are the ones that have the real appetite for the commodities, more than what's going to be going on in the West and in Europe in the future. So I think, you know, the buying pressure is going to still exist on these commodities. It might not be coming from the West, but it's going to be coming from the East. So the global price is going to stay up. But, you know, look how fast this price, you know, look at the ratios. Look how fast this metal could spike up. And I'm not talking just in the absolute dollars. Look at the ratio. 4 times the price of gold on palladium. And that was because of a rumor that Russia was running out. And this, you know, platinum, right? You know, you can look at this and you can say, yeah, it crashed. And I know people like to say, you know, oh yeah, that means it's no good and everything. But, you know, the one thing that's bothered me about platinum, and I'm wondering how much more of a pullback the damn thing could possibly have, is because it's priced less than gold. And I don't think gold can have too much of a pullback anymore. Actually, I want to get out of that short position in gold pretty soon because I don't like it, to tell you the truth. And I'm not into it too heavy. That's one thing. I only did double leverage, and I didn't go into it too hard. That's the only short position I got left. I got out of this silver short position. I took the gains, and that was it. And I'm starting to get long now, but I'm cautiously getting long, and I'm doing mainly non-leverage because I don't know. There could still be more of a pullback. But somehow something was bugging me about platinum was that how could it be going below gold that much more? It makes flat out no sense. And I know this does no media exposure. You don't have all the people out there that I listed, you know, the Max Kaisers and everybody else pushing this stuff, you know. But quite obviously is JP Morgan behind this. Come on, you know. It's actually more skewed than the case for silver. Far more skewed. Because, like I pointed out, the silver-gold ratio is like about, you know, 52. I mean, right now, you're talking platinum. The platinum-gold ratio is totally skewed. Platinum should not be less than gold. That's like saying the silver-gold ratio would be like 90 to 1 on gold. You know? I mean, in other words, the platinum-gold ratio is near like a record. It's ridiculous. But the silver-gold ratio isn't that way. And I think that's because there's a lot of people buying this stuff because there is quite a bit of advertising going on behind it. But, you know, there's something really wrong with the economy. This is what's telling me that. There's something really wrong with the economy. You look at all the commodities, they're really not going up that much. But what is going to force them to go up? Quantitative easing. Quantitative easing. The guy the entire silver crowd hates as being an evil guy is actually to be the one that is going to make the people with the silver investment the most money. Ben Bernanke. I know I like telling the truth on here. You know, that's the way I see it. But I think, you know, I think actually there's actually be a number of areas that are going to move up, but we got to get QE going. But I don't think that I'm not sure about how much more things are going to pull back, because you know, looking at, say, for instance, even this Palladium chart, you know, the metals pretty much run together. They do. And I don't really, you know, this is really kind of like an industrial metal all the way. So I just don't see how much more it could really pull back with the rarity of some of these metals out there. And, you know, tell you the truth, I feel better about palladium than platinum for this year than I do silver. The fundamentals on palladium and platinum are stronger. They are. I mean, there's some serious shortages in platinum. They had to pull out of stockpiles in South Africa. There's some serious shortages in palladium too. They had to pull out of stockpiles in Russia. Yet the metals got slammed down, and I know it wasn't because of J.P. Morgan. Something isn't right with this deal, this whole deal. I think, you know, these, you know, well, maybe it might be all three, silver, platinum, and palladium, run very hard at one point this year. At which point I'm going to be ready to sell and take fiat cash and wait for the next pullback. But I think there's something coming up here pretty soon where they're going to have to announce QE, because something does not seem correct with the economy. And the real indicator is how the industrial metals and the precious metals are performing. You know, everybody seems to be going pretty strong into gold because of the debt situation with governments. But the ratios to gold don't make any sense, especially in the case of platinum. You know, in the case of silver, that's about right. You know, I know it's supposed to go to 15 to 1, but, you know, during very strong times, platinum is way over twice the price of gold. So, buying something that's cheaper than gold right now should be pretty close to a winner, long range, as long as you're not buying on leverage, because I don't know how long of a wait it's going to be, and it could still pull back a little bit in the short term. But I'm beginning to wonder how much longer a correction period we do have going here. I don't think too much longer, to tell you the truth. So things might be heating up pretty soon, and we might see some more serious moves in the metals. Ben Bernanke's hand is going to have to be forced. It's going to happen. There's going to be more quantitative easing. In a lot of ways, he's doing it behind the scenes in different ways. So it's going to keep pushing the metals up higher and higher. So I would cautiously get back into long positions right now, but don't do it on leverage unless you hear him open his mouth. You know, oh, we're doing something. Maybe you want to jump in there for one day. But I would not do it on leverage just yet.